A lot of people seem to be really shaken up about Nio's recent announcement that they're selling 60 million ADRs. Some of you may even be asking yourself if you should be holding Nio right now and want to know where the share price is heading. In this video, we're going to be talking about the share dilution and what it means and how it will affect Nio's valuation moving forward. And we'll even be talking about other catalysts and risk factors that you need to be aware of. And then, of course, I'll give you my prediction on where I see Nio's share price going, and I'll tell you what I'm personally doing with the stock. I'm pretty sure you're going to want to hear this, so stick around because we're going to be starting right now. Hey, what's going on? It's Pat from Top Ticker Trades. If you're new here and you want to learn how to use stocks and options to make your portfolio go parabolic, make sure you start now by subscribing and tapping that bell so you never miss an upload. What's going on, everyone? Welcome back to the channel. Welcome back to another video, a video about Nio. It's been a long time since I've done one, and I figured it's time now. So Nio is up nearly 2,000% on the year, quite a bit more than competitors like Tesla, who are up nearly 800% this year, but not quite even half of what Nio's been doing. So is that too much movement? Should you be concerned? Is the valuation of the share price justifiable? These are all valid questions. Questions that, from an investor standpoint, we should be asking ourselves frequently. Now, I want to get right into it, ladies and gentlemen, but before I do, I would like to ask you to please consider giving this video an early thumbs up, as it greatly, and I can't stress that enough, helps to support this channel. I put a lot of time and effort into each video so that we could all make money from the market together. And if you're not part of the family yet, I want you to join my family. We're growing fast, both as a community and financially by the day. All you have to do is hit that subscribe button, and don't forget to tap that bell so you have access to videos as soon as they come out. And now back to Nio. So yesterday, Nio announced that they would be selling 60 million ADRs, or American Depository Receipts. So what does that mean for Nio? Well, obviously it's going to mean that there's going to be some share dilution. So if you're a shareholder and you're holding shares, obviously your shares are going to be now valued less, or at least the share price is going to be lower, but you're still not losing anything. You've still got the same amount of shares as you had before. The question really becomes, are you going to be investing in this company, or are you just trading it? Are you a swing trader, or what are you? That's what you need to determine right now in order to be successful in this business. Because if you can't make your mind up and decide what you're going to do or what you want to do in this game, you're going to end up losing money. And I'll tell you that flat out. So here's the deal, okay? If you're not using margin or anything that could, potentially cause you to lose a lot of money, then you're okay regardless of whether or not Nio's shares are down right now, as long as you believe in the company long term. If you believe that this company has a future, if you believe that this company is the baby Tesla, as everybody used to call it, then you're perfectly okay. There's nothing wrong with your shares dropping a few bucks or a few percentage points or whatever the case may be. Okay, you should be happy and take this as a buying opportunity. And I know that you've probably heard this before, but sometimes we have to get taken back to the basics because we forget. We tend to forget as people that, stocks do go up and they do go down. Now, I bet you'd be rushing in to buy it if it were going up, but why? You're paying more than you should be. At that point, if it's going up, wait for a pullback, buy it on a red day. So when you see an offering, do the opposite of what everybody else is doing, and that's how you're going to make money. While everybody else is dumping shares because they're scared, guess what? You're going to buy because it's a good time to buy. You're getting a heck of a discount, and now you can buy in, you can average down, or you can, possibly pick you up some shares to trade temporarily and sell them when the price recovers. And then you'll be able to afford more shares whenever the price pulls back for whatever reason in the future, and you could get it at a lower cost. Now, if people just changed their mentality just a little bit, just adjusted it that way, they would be making a whole lot more money in the stock market. But unfortunately, it's human emotion and the entire human psychology that keeps most people from making money in the stock market. In fact, it makes them lose money. And that's why, if you're not one of those people that can control your emotions and think rationally when things go against you, then it's probably better that you don't access your trading account at all. Or, I mean, not at all, but you don't access it every day or very frequently, because those emotions, one of our very basic faults, is going to cost you some money. With these apps like Robinhood, Webull, First Trade, all of these apps have made it extremely easy for us today to be able to access our investments or our investment accounts, to where we can go in and, sell shares, buy them, do whatever we want whenever we want to them. You get what I'm saying. You basically have a lot of freedom when it comes to messing with your own investments. Well, back in the day, the people that built their wealth and grew their portfolios, they didn't have that privilege, or should I say curse, because for some people it is a curse, but they didn't have that. They didn't have access or easy access to their accounts. So they did things the old-fashioned way. So that's one thing you may want to consider if you're not, emotionally sound when it comes to investing, is to stay away from your investment portfolio. If this did apply to you, I'm sorry if I hurt your feelers. It's just a talk that we needed to have, but I think at the end of the day, it was good advice. So I'm going to sleep well at night. But now let's talk back about this situation. So we saw that Nio wasn't the only one to do an offering. We know that Tesla and Xpeng and Li, all of them just went back to back, and now it was Nio's turn. So Nio did it. And why are these companies doing that? Well, they're doing it because it's a good time to do it. Right now, the market, or the sector rather, is hot. It's on fire. So these companies are going to sell their shares because they need to raise the funds for one reason or another. Now, I can't speak on every individual reason for each company, or I guess I could, but I'm not going to in this video. But in Nio's case, I mean, these shares being diluted, and people freaking out, they're forgetting that this is a temporary dilution, which overall is going to strengthen the company. Now, these extra shares that are being put out, they're going to help Nio grow by adding manufacturing and distribution capacity. I mean, they could do a lot for Nio. Just think about how much money it's going to have on hand right now. If I'm not mistaken, I want to say they already had a couple of billion in cash. So now this is expected to add about 2.7 billion. And that's if we're going by the market price, the closing price of on Thursday, I believe it was, $45. I mean, that's a lot of money for a company to have on hand. And we know what Nio, is up to. We know what their plans are and what the company is wanting to do. So from an investor standpoint, I see no concern whatsoever with this company diluting its shares, or the shareholders' shares, because they're putting it towards a good purpose. We know that they're working on autonomous technologies. We know that they've got the battery as a service technology. We know that they're coming out with new vehicles. We know that the demand in China in this industry is insane. They can't keep up with it. In fact, the demand there is greater than the amount of vehicles that all of these Chinese manufacturers are putting out altogether. I mean, this is why we've seen such increase in sales for every single EV manufacturer that's coming out of China. We've seen all of them, record percentage growth, which in my opinion is why you're paying such a premium when you're buying these company names. I mean, you're paying for the brand, you're paying for the company, so you're going to pay a premium when it's expected to grow at the rate of growth that these companies have actually proven to be growing. So you have to admit you're going to get a lot more growth out of these companies, such as Nio and Li and Xpeng, than you will out of a company like Tesla. I mean, don't get me wrong, I've got nothing against Tesla. It's a wonderful company. I expect it to grow a lot more. It is changing the world. But in terms of growth, let's face it, let's be honest, you're not going to see the same kind of growth out of Tesla as you would out of Nio. For instance, for Nio to 10x or even, 20x, it's very possible and very doable, and it can happen fast. For Tesla to 10x or 20x, I don't really see that happening, and if it does happen, I think it'll take quite some time. And partly because the growth that we're seeing out of Nio right now, or the growth that we expect to be coming in the very near future, is growth that Tesla has already experienced. So can't really compare the two like that, and can't have the same expectations as far as, future growth from this point forward. And even though it's no secret that, yes, Tesla may be far ahead of Nio right now, but, Nio's going to be a solid competitor unless, maybe Tesla tries to buy it out or something. But Nio's going to definitely steal market share. They're already, trying to get into Europe and doing a lot of amazing things. Let me again say battery as a service. That's going to be huge, especially in China. It's a great concept, but it's one of those concepts where you either love it or hate it. But all I can say is we're going to have to wait and see how it plays out. In my opinion, it's something that's going to make a major difference for Nio, and Nio being the first to really, develop that service, I think is going to have the first mover's advantage and really just take over. So the money from these offerings, as you can see, is really going towards these companies developing an advantage. It's causing these companies to do things to help them grow, to develop better technologies, to, really build out their infrastructure, and for the R&D that they need done in order to put out better products than their competitors. So one more thing that I feel like I need to address here is the implication that comes with all of these EV manufacturers diluting shares around the same time. Now, to some people, this may imply or signal even that these companies believe that their shares are overvalued right now. And I'm addressing this because Stock Mo brought this up in one of his recent videos. So my thoughts here are that he makes a great point, but we also have to look at the bigger picture. So if you believe in this company and trust that this company is doing what it's supposed to be doing with the capital that they're raising, then the short-term valuation, again, going back to what I said earlier on in this video, essentially it doesn't matter because you're going to see some massive growth from this temporary dilution in share price that we're seeing right now. But I'm sure a lot of you want to know, well, what can we expect out of Nio's share price in the near term with all of this dilution going on? So let me just point you guys to history, okay? To Nio's history. The last time that we saw Nio selling shares was back in August, okay? And they offered 75 million ADRs at the price of $17. Now, this is 15 million more than they're offering right now in this offering. And since then, shares were up 127%, okay? That means that Nio has more than doubled since then, and it's only been a few months. We should also take a look at what happens in the overall market to other companies or share prices of other companies when they do an offering. Generally, we see that as soon as the offering closes, the share price goes right back up. So basically, that's the trend. That's what it's been for a little while. And that's pretty much exactly what I expect to see out of Nio this time. Additionally, Nio isn't one of those type of companies that that dilutes shares all the time. It's been 4 months since their last time to do it, and the stock has just been on a rampage. So I don't think that there's anything to worry about here. But I would really like to know what you think about this. So leave me a comment below. Let me know, do you think that I'm right? Do you think that I'm wrong? I like hearing from you guys. I like to hear your opinions. But anyhow, let's talk about something else real fast. So China's State Council has a new energy development plan, which is appropriately named the 2035 New Energy Development Plan. And I'm sure you guys have already heard about it. China's goal is to achieve 20% EV penetration by 2025. And of that 20% penetration rate, around 5 or 6% is expected to happen this year. So Nio's CEO was recently giving a speech, and he said that basically these percentages were very conservative. Now, if he's saying that while he's giving a speech, and they're trying to ramp up production. We know they are. I think that this may be actually telling us that the demand is much greater than we expected. And if that's the case, my friends, then you can expect big things happening for Nio. So I just wanted you guys to, keep that in mind. And I think this is where I'm going to leave off for today. But don't you worry, because I will have some more videos coming up very soon. I'm actually having to get off here because I've got more videos that I need to put out for the day on other stocks. But here's one that you guys need to keep an eye out for. Yesterday, I turned 50 bucks into, I want to say maybe 500 on, a pretty quick trade. So I'm going to make a video on that. I want to show you guys, how easy that is if you find the right opportunity. And those opportunities are lurking everywhere if you know how to use options, but if you know how to use them safely, let me say that. So I am going to make a video on that. Hopefully I can even do that tonight, because that shouldn't take too long. I'll get that uploaded for you guys. So if you're not subscribed already and part of our wonderful growing family, our lovely family, make sure that you do subscribe. Make sure you tap that bell. That way you'll have access to all these videos as soon as I upload them. And you're not waiting around losing potential profits while the rest of us are earning. Got the end screen coming right up with some YouTube suggested content if you guys just can't get enough and want to see some more of my videos right now. So that's on the way. I'll see you guys in the next video. Congrats, ladies and gentlemen. You've made it to the end of the video. If you like what you watched, make sure you subscribe, because I put out videos just like this one every single day. And please do me a favor and smash that like button if I helped you in any way, because it really goes a long way in helping the channel out and keeps me motivated to make videos every single day. Now, there's a lot of work involved, a lot of research, and a lot of time and effort into editing and putting these out daily for you guys. You can subscribe from your screen right now, or if you want to watch one of my other videos, I'm sure YouTube has some good content picked out for you on the left-hand side of your screen now. Thanks for sticking it out with me till the end, and I will see you guys in the next video.